What if you found out that the money in your bank account isn't really there? That when you deposit money, the bank doesn't keep it locked away, but lends most of it to someone else? This is not a secret. This is how banking works. To understand who really controls money today, we need to go back to where banking began. Thousands of years ago, people needed a safe place to store their wealth. Grain, gold, and silver were valuable, but easily stolen. Temples and palaces became the safest places to keep them. Priests and leaders guarded these valuables and recorded deposits. This was the first form of banking. Over time, these stored goods were not just protected, they were used. Leaders realized they could lend stored wealth to others and earn something extra in return. This extra payment became known as interest. In ancient Greece and Rome, banking became more organized. Bankers exchanged currencies, stored savings, and gave loans. Trade became easier, but when banks failed, people lost their life savings. Banking brought opportunity and risk. After the fall of Rome, banking slowed in Europe. Charging interest was considered immoral, but trade never stopped. As commerce returned, so did banks. During the Middle Ages, banking grew powerful again, especially in Italy. Wealthy families like the Medici helped merchants travel without carrying gold by using written promises. Money became lighter, faster, and more flexible. As nations grew stronger, rulers needed money, especially for wars. Governments borrowed heavily from banks. This gave banks enormous influence. If banks refused to lend, governments could fail. In the 1600s, central banks were created. These banks worked with governments to control money supply, interest rates, and economic stability. This system still exists today. Modern banks do something most people don't realize. They create money when they give loans. Every loan adds new money into the economy. This is why debt is everywhere, from student loans to mortgages. But when banks make bad decisions, the consequences are huge. Financial crises can destroy jobs, savings, and entire economies. Today, money is mostly digital. We tap cards, scan phones, and send money instantly. Banks work quietly behind the scenes, guiding how money flows. Then came cryptocurrency. Bitcoin was created to reduce the power of banks and give people direct control over money. Whether it succeeds or not, it challenges the system for the first time in centuries. So who really controls money? Banks move it, governments regulate it, central banks influence it, and everyone else depends on it. Banking is not just about money, it is about trust, power, and control. And once you understand banking, you start to see the world differently.